Hey everyone, and welcome. Every single tax season, we all face the same big question here in India. Should I stick with the classic old tax regime, or is it time to switch over to the shiny new one? It can get pretty confusing, right? But don't worry, we're going to break it all down nice and simple. Let's get right into it.
So here's our game plan. First, we'll cover the two basic choices on the table. Then we'll take a deep dive into the old regime, followed by its challenger, the new regime. After that, we'll put them head-to-head in a proper showdown, and to wrap it all up, we'll help you figure out which one really makes the most sense for you.
And really, this is the only question that matters, isn't it? The whole point of this is to give you the tools you need to answer this for yourself with confidence.
At its core, this whole thing isn't just about tax rates. It's actually about two completely different philosophies. You've got the old regime, which is all about flexibility and using deductions, versus the new regime, which is all about simplicity and having lower rates right from the start.
All right, let's kick things off with the one we've all known for years, the good old regime. The main idea here is pretty straightforward. Yeah, the tax rates might look a little higher on paper, but you get access to this amazing toolkit of deductions and exemptions that can seriously shrink your total taxable income. Now, have a look at this table. What's really interesting here is how that tax-free limit, the basic exemption, changes based on your age. So for most of us under 60, anything up to 2.5 lakhs is tax-free. But if you're a senior citizen or a super senior citizen, that limit gets bumped up, giving you a nice little advantage. From there, the rates climb from 5% all the way up to 30%.
And this right here, this is where the old regime really shines. This is its superpower. You can literally chip away at your taxable income using a whole bunch of deductions. We're talking about really common stuff like your PPF or EPF contributions under Section 80C, the interest you're paying on your home loan, your HRA if you're renting, and even your health insurance premiums. All of these together can make a massive difference to your final tax bill.
Okay, now let's meet the challenger. The new regime was brought in back in 2020 to basically make our lives simpler. So here's the deal. You get lower tax rates, which is great, but the trade-off is you have to say goodbye to most of those popular deductions we just talked about.
Now take a look at these slabs. First thing you'll notice is that the tax-free income starts higher, at 3 lakh rupees for everybody. Doesn't matter how old you are. And see how the rates climb up more gradually? There are more steps in between, 10%, 15%, 20%. Which can actually be a huge plus for people in those middle income brackets.
But wait, this is the big one. This number right here is the headline feature of the new regime. Thanks to a tax rebate, if your taxable income is 7 lakh rupees or less, you effectively pay zero tax. Nothing. This alone makes it an incredibly attractive option for a lot of people.
But remember, there's always a trade-off. While you do get a higher standard deduction of 75,000 rupees, you're giving up those heavy hitters like Section 80C, your HRA, and home loan interest. It makes the calculation way simpler, for sure, but there's a lot less room to strategize. And just a quick note, that 4% health and education cess, that's basically a tax on your tax, and it applies no matter which regime you choose.
All right, it's time for the main event. Let's put these two regimes right next to each other and see how they really stack up on the things that matter most.
So, in a nutshell, this is the choice you're making. The old regime is for people who are actively investing and using those tax-saving tools. The new regime, well, that's for people who'd rather have lower rates from the get-go without worrying about tracking every single investment and claim.
Okay, this table just makes everything crystal clear. You can see right away, the new regime wins on that rebate limit. 7 lakhs is way better than 5. And it also wins on the standard deduction. But, and this is a big but, the old regime is the only place you can claim huge benefits like your HRA, the interest on your home loan, and that whole universe of deductions under 80C and 80D. Honestly, for most people, this table right here is the whole decision.
So, you've seen all the facts. How in the world do you actually choose? Well, it really just comes down to your personal financial situation. Let's try to figure out which profile you fit into.
So, the old regime is probably your best bet if you're someone who's maxed out your 80C investments, you're paying a pretty big home loan EMI, you've got health insurance, and maybe you're paying a lot in rent. If that sounds like you, then all those deductions will almost certainly save you more money than the lower rates in the new system.
On the other hand, the new regime could be a total game changer for you if you're maybe just starting your career, you don't have a lot of loans or investments yet, and you just want a simple, predictable tax calculation. That's simplicity, plus that zero tax benefit up to 7 lakhs, that's pretty hard to beat.
Now this next part is absolutely crucial, so please pay close attention. The new tax regime is now the default option. What does that mean? It means if you do nothing, if you don't tell your employer anything, they will automatically calculate your TDS, your tax from your salary, using the new regime's rules. So if you've done the math and the old regime is better for you, you have to actively choose it.
And here's some fantastic news if you're a salaried employee. This decision isn't permanent. It's not set in stone. You can actually reevaluate your finances every single year and pick whichever regime saves you more money for that year. That gives you some amazing flexibility.
So we've laid out the facts, we've looked at the profiles. The final step, well, that's up to you. Theory is great, but at the end of the day, only the numbers can give you the real answer. So, have you actually run the math for your own situation?
And the best part is, you don't have to guess. The only way to be 100% sure is to just sit down and calculate your tax under both regimes. Seriously, it's the most powerful thing you can do to take control of your finances.
And to make it super easy, the Income Tax Department actually has an official comparison tool right on their website. Just go to incometaxindia.gov.in, punch in your numbers, and it will spell out the exact difference for you. It's the absolute best way to make a smart, informed decision. Thanks so much for tuning in.